Hello and welcome back to CEO.CA's Inside the Boardroom. My name is James Petham and today I'm joined by Paul Parisotto, President, CEO and Director of Moon River Moly. They trade on the Venture Exchange under the ticker MOO, M-O-O. Paul, it's great to be chatting with you today.
Good morning, James, and it's my pleasure to be here this morning.
So let's kick things off. Can you give our viewers a quick overview of Moon River, maybe a 30-second elevator pitch?
Absolutely, and thank you. Moon River Moly, as the name suggests, is focused on developing molybdenum assets, and we have two fabulous assets, both located in British Columbia. They're about 160 kilometers apart, and we're developing these assets. One is an asset that we control 100% of. It's called the Davidson deposit. It's located right in Smithers, British Columbia. And it is one of the highest grade moly deposits in the world. And the other asset that we have is a 25% interest in the Endako Mine Complex. It's located about 160 kilometers south of Smithers. And that's a very large mine that was put on care and maintenance in 2015. And our joint venture partner, our partner in that mine is Centerra Gold, a very large, reputable, well-run mining company.
Great. So I understand you recently went on a site visit to the project. Can you walk us through what were some of the highlights that you saw there?
So Ian McDonald, the chairman of the company, and Gordon Reed, our lead technical director, and myself and a couple other advisors spent a week in British Columbia visiting the assets. We visited both and toured the Davidson deposit as well as the Endako mine complex. While we were there, we also met with local officials as well as the affected First Nation communities that we'll be working with going forward. It was a tremendous trip. We got a lot of comfort with respect to infrastructure and the opportunities that both of these assets have. And we're really looking forward to advancing both of these assets.
Great. So I'd like to talk about the second asset for a little bit. The Endako Mine Complex acquired a 25% stake in that project, closed fairly recently. Can you walk us through the vision behind that transaction? Where did you see the opportunity for adding Endako, and what's the vision looking forward?
So the Endako asset, is a primary moly mine. It was put into production by Boardroom back in the 60s, and it was in continuous production right until 2015. And just before it was shut down due to lower moly prices then were in the low teens. A brand new mill was just built. A 55,000 ton a day mill was built. There's a mine life there of more than 10 years with lots of exploration potential. And given that today that moly prices are above $20 a pound, actually they're closer to $23 a pound, we see there's an opportunity to reevaluate the costs and the profitability of putting this asset back into production. And that dovetails really well with our Davidson deposit, which is really our crown jewel asset. And it's going to take a number of years to complete a feasibility study and get that property into production. So we're envisioning hopefully nice positive cash flow from the Endako asset while we're building and completing, building out the Davidson mine and getting that into production. So we think both assets complement each other. There's $140 million of tax loss pools that we've also acquired with the Endako asset, which hopefully will just add to the profitability and the free cash flow that these assets can generate.
Great. Thank you very much for that overview, and interesting to see, that complementary approach of both the Davidson and Endako projects. Can you walk us through what are the immediate next steps now that you've been to site at Endako? What's going to be happening over the coming months?
So initially, we're going to have our first kickoff meeting with Centerra, in the next few weeks. And I think it's imperative for both ourselves and Centerra that we want to try to create value for our shareholders, and that means doing a study to assess what are the costs to restart the mine and what can profitability and free cash flow look like. And so we're going to be, taking steps to do that, and hopefully that can be done, in relatively short order, and then we can look at how we're going to do that. The good news is there's more than 10 years of mine life there, and probably a lot more. We have to verify that by doing some work. There's a mill on site. We have the support of the local community, and so hopefully we can generate positive cash flow by doing that in a relatively short order. So the next steps for us is to evaluate what it would cost to restart production and what profitability looks like.
Thank you very much for that overview, Paul. I want to talk a little bit about the challenges and opportunities, operating two projects just a couple hours away from each other. Can you tell us maybe any specific synergies you're seeing there, and maybe any potential roadblocks as well?
Sure, absolutely. So the Endako deposit is located down, approximately 160 kilometers away on a paved highway from Smithers, where the Davidson deposit is located. So it makes an awful lot of sense to have your management team located in Smithers, and they can oversee the operations of both assets. Remember that right now, Centerra owns 75% of Endako, and they would be the manager of that asset as things stand. And they're an excellent company with an excellent track record, and they'd be a tremendous partner. Additionally, when we acquired our 25% interest in Endako, we also acquired $140 million of tax pool credits that we want to optimize between the two assets, which ideally will help enhance the returns on both projects. There's a rail line between both Endako and Smithers that potentially could play a role in how we move things around and how material gets treated. That's less likely, but we have to examine all of the opportunities. With respect to challenges, there's one's an open pit mine. That's Endako. The Davidson would be an underground mine, so they're very different. But there's many examples of companies that operate both open pit and underground operations successfully. And so the challenges for us, I think, would be the molybdenum price, because the market is not that deep, but there's lots of room for profitability, I think, given the nature of the two deposits and what the cost would look like when they're in production.
Great. And I want to touch a little bit more on that, the molybdenum market. Obviously, price has gone up significantly since the Endako mine was shuttered in 2015. Can you walk us through what are some of the key catalysts? Where do you see maybe the areas of either price growth or sustaining these current prices?
Sure. So taking a step back, the molybdenum market is not a very deep market. The annual production consumption is about 630 odd million pounds. In 1950, it was 30 million pounds. The market for molybdenum has steadily grown at about 4% a year. The World Bank is forecasting additional growth. So the market can be quite volatile. The 3/4 of molybdenum supply comes from other mines like copper mines, and then the other 25% comes from primary molybdenum mines like Endako is, and like the Davidson the deposit will be. And so when you look at that and what's happening around the world, China, to our best of our knowledge, is currently an importer of molybdenum, and they use a lot of molybdenum. That could change because they're building a very, very, very large new mine, and that could change in the future. But they seem to be absorbing all of the supply that they're providing. In the West, a lot of the molybdenums come from copper mines that are located in South America, and some of these mines are quite old and getting towards the end of their life, and the deposits are deeper, which makes them, which often raises the cost to produce copper and molybdenum. So our view is that the prices will probably stay kind of where they are and hopefully increase a little bit. But as long as we're above, the $21 molybdenum a pound, we're very comfortable in that range. If we get fortunate and molybdenum prices, continue to go higher, they've been, they've been above $30 many times, and over the years. That would just be tremendous for both of these operations.
Thank you very much for that overview, Paul. And great to see that buffer zone in terms of the economics at Endako between the current molybdenum prices and maybe the previous prices at which the mine was closed. Just to wrap up, I want to hear a little bit more about the long-term vision for Moon River. Where do you see the key growth opportunities?
We are entirely focused on developing the Davidson deposit, one of the world's, if not the world's highest grade deposit. And we're not wavering from developing that asset. The next stage there is to do a short drill program, a drill hole program this summer to get some fresh drill core to allow us to see if we can economically recover these byproduct credits that we've mentioned in previous interviews and in our news releases, being tungsten, rare earths, gallium, and copper. And we should have that work done by the end of this year to maybe the very beginning of next year. And that hopefully will add additional revenue and make the asset, more valuable. And while we're doing that, we're going to hopefully be engaging in a study with our partners at Endako Centerra to reevaluate the costs and the cash flow that could be generated by putting Endako back into production. We'll be evaluating that. So those are the near-term catalysts that I think will add value. Longer term will be having these assets in production, generating free cash flow. And of course, we're always open to other opportunities that we believe will bode well for our stakeholders, our shareholders, to enhance value for the company, whether that's organically or through M&A or those kinds of opportunities.
Great. Well, Paul, looking forward to more updates from Moon River throughout the year. Thank you so much for joining us today.
Thank you for having me.